There are things that aren't on the documents, though. There are things that you should make a record of. And I think this is also an area where, you're asking how long you keep things and so forth. This would start to kind of fall into that category. Is if you're making an after-tax IRA contribution to a traditional plan, that money isn't taxable when it comes out later. But the traditional IRA is generally thought of as a untaxed thing. The IRS doesn't keep track of that. No one knows whether or not or how much of an after-tax contribution you put to an IRA. So if you're doing it, you need to keep track of that. You need to keep that information pretty much forever until you have the IRA, because when you start taking it out, you're going to want to remember that. One of the things I encounter sometimes is Roth IRAs. People will put money into a Roth, which, remember, that's an after-tax contribution. You can take that money out before you're 59 and a half. You can get your principal back out. That's the beauty of a Roth IRA. Very flexible tax advantage vehicle before and after 59 and a half. But let's just say you take all of the money out before you're 59 and a half. How much of that was contribution or already taxed money? If you started your Roth at one place and moved it to another place and then another, though that last place only knows what they started with. They don't know how much you contributed. You've got to keep that record. So those are records that aren't on a document. You need to keep them. Now, how long do you have to keep this stuff? The IRS can go back 3 years, and try to trip you up and catch you for fraud. I mean, that's one rule of thumb. 7 years is another time frame that you'll talk about. I would say keeping your old tax returns, or, if you have 3 years worth, if you have, if you're kind of worried about how you did things, maybe a little bit longer. But those documents, those are really the rule of thumb would be 3 years for all of your supporting documents to show, how you did the tax return. Maybe keep your tax returns, for 5 to 7 years. One of the things I find, people keep monthly statements forever and ever, or year on year. I don't think you need to keep statements because they are electronic. You can go back and get that information, and it's really not what's reported on your taxes. But if you want to keep the year-end statement, I think that's nice to go back and see where you were. But you should keep your, your tax supporting documents on file, because in particular, it's going to be your deductions, the things that get reported to the IRS, 1099, W-2. What that document is telling you is this is information that somebody told the IRS about you. They're basically saying the IRS knows this, and they're going to be looking for you to report it on your tax return in some way. But when you start taking deductions, medical deductions, if you have a lot of medical expenses, if you, I mentioned that the 1098 for tuition doesn't reflect other expenses that are qualified for deduction on your or on your 529 distributions. Those kinds of things, you want to keep those around for, I would say, 5 years in case the IRS ever comes back and challenges a return. They're going to want to see why you did what you did, and that's your information. So keep it in a box, scan it in. Many places today, I work with a lot of accountants that have a vault, and all of this stuff is scanned in. So if you're not working with a professional, I think scanning it in is a good way to go, and you just have a file on your computer for 2020, 21, 22, 23, and so forth, and just scan that stuff in, and then you'll never really have to worry about it too much. Thanks for tuning in to the video today. And if the conversation we held resonates with you, check us out at goodfinancial.com. Go to Contact Us, and we're happy to schedule a conversation with you to answer any questions you might have and help you in your financial plan.